Hey guys, so one of the things I've recently been getting into is actually finding and investing into dividend stocks. So there's a bunch of things I've kind of been running into, and one of the things I've really wanted to talk to you guys about, and anyone honestly who's trying to get into dividend stocks, is really just to start. And I really want to tackle what you should pay attention to when you're doing your due diligence for dividend stocks. Honestly, you should be doing your due diligence for any stock that you are investing in, and that goes for pretty much anything that you want. And it doesn't even have to be stock, it could be anything, sneakers, clothes, cars, anything that you want to put your money into that you're seeing as an investment. You want to know what that investment is. You want to know what it'll do for you in the short term, the long term. You want to make sure that you know if your money is going up or down, how volatile it is, and that's really it. So pretty much, let's hop into it. Let's talk about the things that you need to do when you're doing your due diligence for specifically dividend stocks. So, honestly, there's a lot to consider. Some of these you guys may not have any idea about, but it's pretty good time to get learning. The best thing you can do is look around your house and see if you find your favorite product. Once you have that, see if they have a public stock offering in the company. If they do, then ask yourself the question, why did you buy this product? Was it a want? Was it a need? That helps separate the stocks and any stock into two categories. So, one of my favorite stocks that I went ahead and invested in and will always stay invested into is actually Nike. So, I'm an avid sneaker lover. I'm the type of guy who will be on the sneakers app pretty much every single week trying to get some shoes so I can flip them or wear them or, do whatever I need to do with them. So if I personally love shoes and I know that I'm on the app every single Saturday, imagine how many other people are on the app every single Saturday trying to get a pair of shoes. Nike is constantly selling out every single Saturday, almost every single shoe. So why would I not invest in that? Why would I not invest into a brand that I might have 50, 60 pairs of shoes from, some clothes from, anything like that? Of course, you want to invest in those things that you see yourself using every day or, that you see yourself loving. So if you drink coffee and you drink Starbucks every day, Starbucks should probably be on top of your list for investing. From there, you just pretty much want to do your research into the company's finances and SEC files. So most companies share it and it's pretty easily accessible. Most times they do have a PowerPoint, which is great to skim over, but then you want to go into the actual financials and see things like the debt load, the sustainability, the future long term prospects, potential challengers, product moats, which is, market share. And then, you want to talk about the potential market problems the company will see. So if we want to use Nike as a reference again, pretty much one of the big things that happened not too long ago was the vice president's son getting caught for buying shoes, using company stuff, and going ahead and reselling these shoes, and having that connected to the vice president and her credit card. So that's something that heavily impacted Nike, and that's something where you have to understand that maybe the worst things might happen, but you have to buy in and have to be in there for anything that may happen. So, even if we want to talk about Starbucks, a couple of their issues that they went through in Philadelphia and things like that involving the black man, you just have to kind of understand that these companies are going to do company things and you have to be along for the ride. On the stock side, you want to look at the totality of the stock, not just the last 5 years or 1 year. You want to look at how the stock actually performs. So we're just looking at, like I said, things like Nike, companies that are really, they have a strong hold on the market. Things like Apple, Amazon, these things will always have, and they will for the next 5 to 10 years, they will have a strong hold. There will always be absolute buy. But things that you might want to look long term at is maybe things like energy, investing firms. You kind of want to look at these things and make sure that they're performing correctly and that they didn't just have a strong year or a strong couple years that averaged out to a green sign going up. You want to kind of make sure that you're on the right side of things and the company that you're investing into won't turn into an Enron. And then what you want to do is you want to consider where it is in the last 52 weeks. And then you want to look at the high end or the low end. If it's low, is it a long-term problem or is it just a short-term value play? So something like that's happening right now involving that is like with Tesla. I got my hose on Tesla, and honestly I'm just gonna stay where I'm at. Where I'm at is already a really strong profit, and honestly I think it'll keep going up. And mind you, I'm saying this after Elon sold all his shares and things like that. But if you look a little bit deeper into why he sold his shares, when he sold his shares, things like that, you'll be able to see tax benefits and the reasoning behind it. And not stay so surface level with things like most people are. So most people are looking at the fact that when on Twitter ask people should he sell shares, and it looks like he's just going off what the people said. So there's a bunch of people who's dumping Tesla stock right now, and then I promise you, by the time March comes, April comes, there will be the first people on the line saying, "Man, I shot myself in the foot." You want to look at their earnings per share and whether they beat estimates or are seeing a lot of missed earnings or lack of profits. Keep in mind, compared to last year, everything is going to be earnings. So the caveat is trying to compare it to 2019 at the very least. You want to compare it to the last regular year that most people had, because most people in 2020 either sank or swam. So it's really up in the air. But a lot of good companies maybe put up bad numbers last year, and a lot of bad companies put up some good numbers last year. The next thing you want to do is you want to look at the management structure. You could have a great company get torn down by terrible management. Look at the large players for who owns the stock and how much they own. AKA, is a company, held by insiders, by retail, or by variety. So, these are things that kind of make it easier to understand kind of where the price of stock is and why it is that high and things like that. So it just helps you get an overall bigger picture of these investments that you'll be going into, especially if we're going to be looking at dividend stocks, which is going to be, we're depending the price on how much we're getting back. So we want to make sure that the companies that we're investing into aren't going to sink and they're not going to have, extreme times of droughts and things like that. And we want to make sure that what we're investing into will exactly be we need. Next thing you want to do is you want to consider how much you'd be willing to pay out, that business if you had the riches to own it. If you can't bring yourself to own the entire business, then I don't see the point in buying a single share. But if you feel the business is worth owning, consider what you'd want from that business if you remain the owner for your slice of the next 30 years. You want growth? You want stagnation? How about some declines? Most of us want growth, but too many end up with stagnation and declines. You can't always take the word of the company and say, okay, this is what's going on, this is what they're doing. You got to look at the actual numbers, look at the data, and use that to, kind of strive yourself. So there's a lot of really good companies out there that used to strive, but you were invested in a singular, maybe like 10, 15 years ago, price is a lot different. The stock was out there, people may have believed in it, but it's not there anymore. It's non-existent. You got to look at the numbers for what the numbers mean. Next thing you want to do is you want to look at the dividends. Does it even pay a dividend? A lot of people, they'll hop into stocks thinking just everything is a dividend stock. I can get money off of every single stock. And on the opposite end, most people will look at stocks without even knowing that they can get money off. So look at it. What are you getting from it? And then pretty much what's the history of that? Is it always going up? Is it staying the same? And what's the rate? Is it changing during times of hardship? Is it going down? Is it going up? You want to look at today's dividend and look at can the company actually afford paying that for at least 10 years. Most times, if it's under 5%, they probably can afford to pay it. But if it's over 5%, there's more and more risk that the company will cancel out the div to save some money. So that's a very big one that we want to talk about. Because if we're just constantly investing money into this company that's paying us back, and then all of a sudden they're not paying us back no more, then we just have hundreds, thousands of dollars invested into a company that we're not getting back anymore. So now we have to do this research all over again, put our strategy back into another company, and then you pretty much start over. I know I said this earlier, but you want to consider the cash flow. Debt is healthy for business. No debt, ironically, can be very bad. Too much is obviously very obvious. Consider what they spend money on. Is it innovation? Is it research? These are all things that you want to know when you're putting your money into a company. There's a ton more you can look into, but this is pretty much usually good enough, especially when people are just starting out. If you did a great job looking at these things, then you'll score a sustainable company you can call yourself an SCO of, which is, just slice of a corporate exec officer, for the next 30 years with positive growth, fantastic products, unmatched quality, and a rising dividend that pays you part of your annual paycheck every year forward. So guys, these are, just my quick tips and tricks when it's coming to, buying dividend stocks, buying any stocks. Like I said before, this is really when you're investing into anything, you want to make sure that, you're not just getting something that isn't gonna make you money. Not everything that's a Yeezy is gonna be $300-$400. Not everything that's Gucci is gonna retail or sell for $800-$900. So you want to make sure that what you're buying into is actually what it is. And then you want to make sure that it'll keep going up in value so we can sit back and let dividends do what dividends do. I hope you guys really liked the video. I hope you guys really use these tips and tricks to hop into investing. Start looking into dividend stocks and see how you're feeling them and see how can I really get some of my money back for this time that I'm putting in, and pretty much be able to just let that work itself. Let me know how you guys, are feeling this. Let me know if you're going to use some of these tips down below and what else you would like to see from me, when it's coming to stocks and things like that. I will have a few more dividend videos coming out just because it is something that I'm getting very intrigued about. So I hope you guys stay tuned, and I hope you guys, are able to see the rest of the videos. Have a good one.